welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SOFI stock. In this video, we will be analyzing 3 articles, to where the first one is titled, Forget Student Loans. There are a number of other reasons to buy SoFi stock, so we'll be going over their latest news updates to determine if this is still a good company to hold in your overall portfolio. Next, we'll dissect an article titled, Is it too late to buy SoFi stock now? Watch for a key price level before jumping into the trade with SoFi stock. So we'll be discussing what the best price or average cost to have for this overall company, and we'll also go over their latest price targets and price predictions among professionals. Lastly, we'll go over an article titled One Top Fintech Stock to Buy in July, where we will be analyzing their overall upcoming earnings report, which will happen at the end of July. So for more videos on SoFi Technologies or their SoFi stock price, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel so you can support me personally, because that's what keeps me here on YouTube, but if not, by subscribing, you will receive this content for absolutely free. With that being said, I say let's dive right into today's stories. As you probably already know, SoFi Technologies, ticker symbol SOFI, is a fintech company or a financial technology company that operates as a digital bank, and they have been offering loads of value to their investors as of late. Now, there are several reasons why the SoFi share price has both increased and decreased lately, going through a classic ebbs and flows cycle, to where while the stock price is falling, many investors will highlight that the financial services sector is dominated by large banks and corporations such as Goldman Sachs, Morgan Chase, Morgan Stanley, and I would also add Bank of America. However, these reasons for skepticism have caused some investors to overlook some of the most promising prospects of SoFi Technologies' overall business, their flywheel business model, and their overall amazing growth rate. For instance, SoFi gets its revenues from 3 main segments, which would be their lending segment, their technology segment, as well as their financial services segment, and so far, the company has been so resilient that they not only survived various bank runs from other banks crashing, a banking crisis, a pandemic, as well as the student loan moratorium. The company, since all of those things have virtually blown over, is set to surge going forward, because now these obstacles which prevented SoFi Technologies from uptrending in their overall share price are now being removed officially. But let's talk about their segments real quick. Their lending business covers things such as student loan refinancing, personal loans, as well as home loans. On the other hand, their technology segment is built primarily on their Galileo platform, which was a company they acquired around 3 years ago on top of their Technisys platform, and on top of that, their financial services business mimics what traditional banking products give you, such as checking accounts, savings accounts, credit cards, debit cards, and things like that. However, all of these segments have worked together to not only provide resiliency and stability for shareholders and revenue sources for this overall company, but it is set to catapult them to profitability by the end of the year. For instance, during Q1 of 2023, their home loan originations dropped by around 71%, and their student loan originations sank by around 47%. The reason why their overall home loan originations dropped was because rising interest rates, to where buying a house right now, when interest rates are extremely high, is just not wise, so not a lot of people are looking to move. On top of that, the student loan originations for refinancing also sank due to the student loan moratorium, which de-incentivized people to refinance their overall student loans. Because during the moratorium, you didn't have to pay on your student loans, at least your federal student loans, and they also did not accrue interest. So that's why we saw a drop in both their home loan originations as well as their student loan originations. But the company was so resilient that their personal loans actually made up for this, and they ended up making up the majority of SoFi's overall origination volumes. Their personal loans increased by around 46% during Q1, thereby increasing the total loan originations by 7%. So it's really good how their personal loans literally kept this company afloat in regarding to their lending segment, and I think this should show investors just how truly armored this company is from various macroeconomic uncertainties uncertainties and obstacles. I would also like to point out that during quarter one, the revenue for their technology segment grew by 28% year over year, up to $77.9 million, and their financial services segment revenue tripled from around $23.5 million to $81.1 million. So clearly, not only is this company hyper resilient, but they are scaling very impressively. However, this is just the top of the line regarding their revenue. What about the bottom line for SoFi Technologies? Well, let me put this into perspective. Back in quarter one of 2022, the company had a net loss of around $110.4 million. So they had a huge loss. However, for quarter one of 2023, they only reported a net loss of $34.4 million, meaning that they dramatically decreased their overall net losses to the point where management is confident, to where they believe the company will be GAAP net income positive by quarter four, which should ignite the overall share price to go even higher. Currently, SoFi stock trades for $9.06, while bearish negative analysts believe the company will fall back to around $3, while very bullish analysts believe the company is worth around $14. So now let's discuss which of these analysts are actually correct. As of right now, the SoFi share price has skyrocketed year to date by around 90%, which is exactly what we predicted in prior videos. However, I personally think the share price of SoFi will pull back before their upcoming catalysts, which will be in October, due to the ending of the student loan moratorium, where people will now be required to start to pay back their student loans, and their student loans, at least on the federal level, will start to accrue interest, and at the end of the year, like we said earlier, they are set to become profitable, but I do think the share price will pull back before those catalysts happen. Other investors like to cite their price to sales ratio as a strength, considering that their price to sales ratio is 4.7, which has been pretty volatile. It's normally between 3.8 and 4.7, while compared to other companies like New Holdings, which trade at a ratio of 10.5, or Upstart Holdings, which trade for around 5.4 times their overall PS ratio. And for me, we would want a low PS ratio. A lower PS ratio would be very good because it indicates that we are getting more bang for our buck when we buy shares of this stock. And the author says that considering that their top of the line growth was around 40%, this could imply that SoFi is undervalued. However, I would actually say that they are all overvalued, but the author is right that you should discount their overall PS ratio and even their PE ratio according to how they are scaling their overall financials in regards to their revenue and earnings. So it really depends on how you look at this. But one thing is for sure, their growth rate is absolutely phenomenal, and I am so excited for the future of this overall company and their share prices. That's why I would more gravitate to the bullish outlook on this overall company, but I do want you to be aware that a pullback could ensue between these two catalysts in October and in quarter four of 2023. That's why this author highlights that you shouldn't be surprised if shares declined to around $6, and honestly for me that would be a phenomenal buying opportunity. Clearly we want to get this company for as cheap as possible, because normally when a stock doubles in a span of only 6 months, momentum traders are going to liquidate shares to take profits. They're not just going to let the company still uptrend without taking profits and practicing proper risk management. That's why after SoFi stock surged from around $4.50 to around $8 to $9, we can anticipate a pullback in the second half of 2023 before these other two catalysts, such as them becoming profitable and people paying back their overall student loans and refinancing student loans with third parties such as SoFi Technologies, end up taking place. So I want to be clear, I'm not saying that investors should completely abandon SoFi Technologies or not invest into them at all. Rather, I'm saying try to get this company for as cheap as possible and then hold this company for the long run. They have a great growth revenue and they are anticipated to become profitable by the end of the year, which is very good. I tend to disagree with various research analysts who have called SoFi Technologies overdone, and they have a sell rating on the company and a $5 price target. For me, that's just too low for this company. Honestly, I think the company at around $6 to $8 would be a comfortable resting point for SoFi Technologies before they decide to take off again when they become profitable. So again, don't get the wrong idea. For long-term investors, I am still in on this company. I own this company. It makes up around 3% of my overall portfolio. I think they're a game changer, but I am waiting for a pullback before I purchase more shares. So in the meantime, I am just holding this overall company. In a previous video, we talked about their upcoming earnings report, so now I'm going to go over some statistics of what the company could bring in and whether or not this is going to be a positive earnings report or a negative earnings report. Because at the end of July, we could see another catalyst for this company, which I think would be rather positive. As of right now, SoFi and experts project that the company will generate between $470 to $480 million of adjusted net revenue in the second quarter, which would equate to around a 32% to a 35% year-over-year increase, which is very bullish. When we can identify companies who are growing at or above a 30% CAGR, which is a compounding annual growth rate in regards to the revenue, this is extremely positive because it means the company is growing very rapidly. More good news is that professionals also increased their overall full-year forecasts pertaining to their net revenue between the range of $1.9 billion to $2.02 billion, while the prior guidance was around $1.93 billion to just $2 billion. So it's good to see that this has been increased, and with the moratorium being lifted, we could potentially see these estimates go even higher, unless you think that these estimates were already taking the ending of the student loan moratorium into account when providing these overall predictions. Also, for the company's full-year adjusted earnings, or EBITDA, they're supposed to bring in around $268 million to $288 million, which again is up from the previous guidance of $260 million and $280 million by the end of 2023. So overall, it's really good to see how professionals are increasing their overall revenue estimates as well as their overall EBITDA estimates for this company for the approaching quarter as well as for the entire year. And once they achieve a GAAP net income profitability by the end of 2023, the sky's the limit for this overall company. With that being said, overall, very good news today. We have three catalysts coming up. A, their earnings report. B, the ending of the student loan moratorium, where people will have to start paying back on their overall loans in October, and then them achieving a profitability by the end of the year. So keep an eye out for that. I would love to hear your thoughts down below. Give me your price targets or what your average cost is for this company. Subscribe if you are new. Don't forget to become a member of the channel to support me personally, and I will see you in the next YT video.